Welcome to the Explainer. While most of us were busy debating our summer travel plans and getting ready to just relax, the capital markets decided to have a totally historic, absolutely drama-filled weekend. We're talking about massive structural shifts happening right before our eyes, shifts that are literally altering the very foundation of how money moves and how companies are valued.
Just look at this. Robots are shopping, rockets are ringing the bell, and fintechs are pivoting. It sounds a little bit like science fiction, doesn't it? But this is the reality of our financial landscape as of last week. These are three wild, huge, and seemingly completely disconnected events, but they're actually deeply interconnected. So today, we're going to break down exactly what happened and, more importantly, what it all means for the future of finance.
Okay, let's dive into this. Here's our roadmap. We'll start with Visa ruling AI commerce, then we'll look at how SpaceX is swallowing up IPO capital, move on to AvidXchange eyeing an exit, and finally, we'll connect the dots on how this is rewiring our financial future.
All right, part one, Visa rules AI commerce. Basically, AI agents are getting a credit card.
To really wrap our heads around this bombshell announcement Visa just dropped with OpenAI, we first have to break down this concept of agentic commerce. What does that mean? Well, it's when AI agents, think of tools you might use every day, like ChatGPT, are officially authorized to initiate actual financial transactions for you. We're not just talking about an AI recommending, say, a new pair of shoes. No, we're talking about the AI navigating the checkout and actually buying those shoes for you. And this is absolutely crucial, it operates within strictly defined guardrails that you set up yourself, things like spending caps and specific merchant restrictions. It's literally like giving your personal AI its own highly controlled corporate card. That's agentic commerce in a nutshell.
And Visa isn't just dropping a press release about this, right? They're actively building the entire highway. Look at this massive infrastructure rollout. They've introduced the Agent Score, which evaluates if a merchant's digital storefront is even technically capable of handling AI-driven purchases. Then there's the Agentic Registry, which is basically a secure directory for authorized AI-bot purchasing agents. And to keep this whole ecosystem safe, they've launched a large transaction model. It's a real-time AI-powered fraud detection system. So yeah, this is not just a PR stunt. Visa is building the foundational, nuts-and-bolts tools required for the whole era of AI spending.
And this brilliantly illustrates their grand strategy straight from Visa's Chief Product Officer, Jack Forestell. He said, AI is transforming the front end of commerce. Stablecoins are reshaping the back end. This is so key. Visa is simultaneously revolutionizing how you and your AI interact with merchants on the front end, while at the exact same time, they're quietly expanding stablecoin settlement pilots across multiple blockchains on the back end. It is a complete end-to-end upgrade of the global financial stack.
But to really grasp the sheer magnitude of Visa's move here, we have to contrast them with the competition. Remember when OpenAI quietly killed its own instant checkout feature back in March 2026? They did that after really struggling to get even a dozen merchants to integrate it. Building payments infrastructure from scratch is just incredibly difficult. Now, contrast that failure with Visa. Visa is simply embedding its 60-year-old, globally trusted, universally accepted payment rails directly into those AI agents. Visa is essentially looking at the tech world and saying, hey, you guys can't build the infrastructure, so let us handle the plumbing. They are making themselves the inescapable toll road. The AI does the shopping, sure, but Visa collects the interchange fees. It's a classic dominant strategy.
Let's pivot to part two. SpaceX swallows IPO capital, the era of the mega IPO.
$1.78 trillion. Just take a second to let that number sink in. That is a staggering IPO valuation of SpaceX, which just went public on the NASDAQ. It is officially the largest initial public offering in U.S. market history. We're talking about a market-shaking, absolutely gravity-defying event that just completely dominated the financial world. Now, what's really interesting here is the sheer scale. When you compare that $1.78 trillion valuation to JP Morgan Chase, the largest bank in America, JP Morgan's entire market cap is significantly smaller. Let that sink in for a moment. A rocket company is now valued higher than the absolute cornerstone of American banking. And what's really fascinating, Morningstar explicitly called this valuation more than double what it fundamentally should be. But did the market care? No way. Not at all. The demand was just voracious.
But look, a mega IPO of this unprecedented size has a severe ripple effect. Suro Capital CEO Mark Klein points out that we are seeing, and I quote, hundreds of billions of dollars going to a handful of companies, multiple times the amount of IPO dollars raised in either 2024 or 2025. This massive concentration of capital is a huge story. It's essentially squeezing all the oxygen out of the room. If you're a mid-sized fintech company that was diligently counting on a back half of 2026 IPO, well, suddenly you've got a major problem. The biggest players, these mega IPOs, are hogging the frame and absorbing literally all the available institutional capital. The IPO window is clearly open, for sure, but it's definitely not infinite.
Moving right along to our third story. AvidXchange eyes an exit, fixing the engine.
Let's look at this timeline and see how this builds a picture of just incredible corporate agility. So, AvidXchange was founded way back in 2000. Fast forward to May 2025, and they get taken private by Corpay and TPG in a huge $2.2 billion deal. Okay, fairly standard. But then, less than 13 months later, on June 4th, 2026, they hire Fintech veteran Wade Ferry as their new chief operating officer. And by mid-June, CEO Michael Prager is already openly hinting at a return to the public markets. Think about that pace. They went private, retooled, and are gearing up to go public again at just breakneck speed.
The signals they're sending are honestly hiding in plain sight. Keep in mind, this is a company successfully automating accounts payable for over 8,000 mid-market businesses. They are rapidly filling their C-suite with highly strategic new hires right now. And, like we mentioned, you have the CEO standing on stage at the Charlotte Passport Conference speaking openly about returning to the market. When a private company starts behaving exactly like this, especially so shortly after a take-private deal, the math points directly toward one thing: classic IPO prep. They took the company private to essentially fix the engine away from the harsh glare of Wall Street, and now they're signaling that the car might just be ready to race again.
Which brings us to our final section. Rewiring the financial future, connecting the dots.
So what does this all mean? The crucial point here is how these three completely distinct stories actually represent a massive, frantic modernization of global capital. The money is moving incredibly fast right now. The fundamental financial rails are being actively rewired for a new era. We saw that exactly with Visa capturing the AI agent market. At the very same time, capital is concentrating heavily at the very top of the food chain, with mega giants like SpaceX swallowing up the IPO ecosystem. And yet, despite all that immense pressure and concentration, players across the board like AvidXchange desperately want back into the public market game.
Which leaves us with this final, really provocative thought to ponder. When AI agents are the ones actually doing the day-to-day spending on massive new payment rails and colossal mega IPOs are absorbing all the available investment capital, who really controls the future of the market? It's a fundamental rewiring of finance, and it is happening right now, right before our eyes. Think about that as you watch the markets open this week. Thank you so much for joining me for this explainer, and as always, stay curious.